Hi everybody, Ted Greene here with Spartan Investment Group. And on this brief video, we're going to discuss the difference between equity multiple and internal rate of return. Currently, it's August of 2021. Spartan is actively raising for a security we call DFW, Dallas Fort Worth, Texas. This is a collection of 18 properties. They're all self-storage assets down and around Dallas Fort Worth, Texas. And let's dive into the offering memorandum, which is the document I like to see investors go to first. And specifically, let's kick it to page 8. Cover a couple of high points. In a different video, we discussed cash on cash versus cumulative preferred return. Please look for that video if you're not totally up to speed on those two metrics. Cash on cash is shown here, and for this investment, the cumulative preferred return is 7.5% annually. By way of the target internal rate of return and the equity multiple, these two metrics are shown at the very bottom of page 8. Let's just briefly touch on what those mean. The internal rate of return indicates the annualized rate of return for a given investment, no matter how far in the future the cash flow payments may come. Let's look at equity multiple for a moment. Equity multiple is the sum of cash flows plus your original principal divided by your original principal investment. So let's unpack that just a little bit. It's important to understand cash on cash because cash on cash shows you the annual receipt of funds in hand that we think the investment will pay you. Years 1 through 5 gives you the stream of cash flow, which we identify as total operating returns. You want to sum those numbers in addition to the sale of the property, the proceeds per $50,000 invested. In this security, we think that's going to be $23,726. You'd want to add that number to the $20,106, which is simply the sum of the cash on cash distributions. That number plus your basis divided by $50,000, which is also your basis, gives you 1.88. In essence, what we're saying is you're going to receive a 88% rate of return if the investment plays out over time the way we have modeled in our pro forma. The target internal rate of return, in essence, that's just the discount rate to future cash flows. We think you're going to make about 15% per year. Part of that will be by way of a capital gain in the future. Part of that is the present value of future cash flows. That's this, cash on cash. Again, look for the other video we've prepared on our website that discusses cash on cash and compares that to the cumulative preferred return. That video is a good foundation to understand equity multiple and internal rate of return. And then one last video that we're going to put on the website is the bonus depreciation video that talks about how investors may be able to neutralize the cash on cash payments that are paid to them based on the tax loss of the investment. Thanks for joining us. Feel free to reach out to me or anybody on the investor relations team at any time. You can reach us at investors@spartan-investors.com, or you can reach me, Ted, at spartan-investors.com. I'm pretty active on LinkedIn and we'd be glad to connect with you there as well. Thanks for joining us.